more than 1%. Well, James Gerrish joining us now live from Shaw and Partners in Sydney to take us through his expectations for trade. James, good morning to you. Of course, we're looking at those overnight moves on Wall Street, set to translate through at the moment. Talk to me about Rio at the moment. Now, of course, we've looked at Rio exiting coal, $4 billion worth of deals in a week. And this under really a commodity picture where we have seen quite a lot of pockets of weakness coming through overnight also.
Yeah, we have. Good morning to you, Natalie. Rio has sold a number of assets over the last week or so. They sold $1.7 billion worth to Glencore last week. These are coal assets, and they've sold another $2.25 billion announced overnight. So Rio is now out of the coal space, which is interesting. A lot of the other global mining companies are still heavily focused on coal. It's still a pillar in BHP's strategy. Glencore is obviously upweighting in the coal space. Anglo America, they were looking to exit coal when prices were lower. Now prices have rallied. They seem to have changed tune. So, my take on it is Rio's doing the absolute right thing here. They're selling into strength. They've done extremely well on their coal business in recent times. Obviously, the thermal coal and coke and coal market has been really strong. So, look, a good move by Rio, and it shows they're out of coal now. So they need to look at what to do with that cash, whether they're going to put it back to shareholders or reinvest in other areas, copper potentially.
Bringing in my guest host this morning, Jonathan Payne of the Payne Report. Jonathan, alongside this news flow coming through from Rio Tinto, we've also had the US SEC charging two former Rio executives, accusing them of inflating the value of coal assets. They've been charged with fraud. When it comes to reputational damage, I mean, how much does this do to the picture that investors have of Rio Tinto now?
Well, it's just a negative, isn't it? I mean, one can't really put it in any different way. So I think the commodity sector, particularly the iron ore space, is under quite a bit of pressure here. We saw Fortescue yesterday obviously downgrade, and a couple of brokers are beginning to, really issue some fairly negative price forecasts on iron ore over the next 3 to 6 months. So yeah, it's an interesting area to watch.
James Gerrish, iron ore also moving lower overnight. As Jonathan just mentioned, we've seen Fortescue downgrading price expectations when it comes to the second half of the year. Again, the flow-through impact and how we could potentially see Fortescue repositioning on this.
Yeah, it's more around the price realisation that they're achieving, or the discount that's being applied to their lower quality ore. So, they came out and said that it was going to be somewhere between 75 and 80% in July. They've now come out and said it was going to be 70 to 75 and more recently. So we met with the CFO not long ago, and that was the clear trend that they were talking at that time. So, yesterday's announcement came as a bit of a negative for the market. You saw it on Fortescue shares. They traded pretty sharply lower initially, but then recovered reasonably well off the lows. So, if you believe Fortescue, this is a cyclical issue. Chinese steel mills are extremely profitable at the moment. Steel prices are high, and while that's the case, they're more incentivised to buy high-quality ore to obviously reduce some of the pollution that takes place as a result of that. If steel prices decline, then they're going to be looking at that lower quality ore. So, Rio is saying that it's a structural issue, Fortescue a cyclical issue. Who do you believe? Both of them are talking their own books, so time will tell. So, the iron ore price, the fact that brokers are downgrading iron ore price expectations, brokers typically are behind the curve anyway, so the price of iron ore has dropped pretty substantially before that. So I think that's in the price of some of these iron ore miners already.
Miners propelling the index higher yesterday. Again, you imagine not lending as much support today. Another sector, in fact, that we were watching closely yesterday, James, the banks came under significant pressure. Now, this has been something that we've been watching too, of course, over the last couple of weeks. The Royal Commission into Australia's financial services sector has certainly unearthed some demons for the Big Four, and that's been weighing on the index. Moving forwards, though, I mean, how do you play this? How do you play the banks?
Yeah, it's hard to like them at the moment. Yesterday we had the Dow up nearly over 2%. Financials were up over 3% over in the US, and we had two of the Big Four banks finish in the red yesterday. So clearly there's a smell about them. I guess the Royal Commission is one aspect to that. We're seeing rising funding costs in the short term. That is starting to have provide a weight for the banking space as well. You look seasonality, and I look a lot around seasonality of particular areas of the market. This is the most bullish period of the year for banks, both in March and April are the two most bullish months for the banks, and that simply hasn't played out at the moment. So, look, they're at the bottom of their trading ranges. They're cheap relative to what they historically trade at. They're cheap relative to what the market is, but there's a lot of uncertainty. They're ex-growth, which we all know about, and that's, I would argue that that's already in the price. If they get a little bit of clear wind away from this, or clear air away from this Royal Commission, perhaps they can rally, but it's a bit of a struggle. And yesterday shows that no one likes the banks at the moment. Yesterday should have been a bullish day for the sector. It wasn't, so that tells you that there's not a lot of love in the market for the banks at the moment.
Weakness coming through for NAB and also ANZ. Westpac and CBA managing to eke out some gains in yesterday's trade. James Gerrish, sadly we're out of time, but great to have you with us this morning. Thank you.
Thanks, Natalie.
Well, for all of you business travellers, let's check the weather forecast with Tom Saunders from Sky News.